The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the May 28th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside the subject line, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day here with U.S. equity markets pulling back, each of them trading to the downside. Dow's up 97 points. That's about 0.2%. 0.2 for the S&P, or 11 points. Basically flat inside the NASDAQ 100, down 7 points. Russell's up 12. Transport's down 22. Semis off 11.25%. So nothing significant to the downside. Gold's now off $5. We've rolled over to the August contract, trading out at 33.23. Silver's down 12 cents, printing out at 33.18. Lights crude up 92 pennies. That's 61.81 as a print there. Natural gas is taking the shorts down over 3% this morning, trading out at 3.61. Looks like that may want to go tackle the swing point from earlier in this month out there. Let's nothing real of any significance out here with regard to TD9 count signals for the instruments that I've got in this market analyzer, if you will, off to the left out there. So instead of nothing really to run through there, let's start taking just simply general market conditions out here. We'll start by taking a look at the advanced decline oscillator and the spot VIX index. So we look at the advanced decline oscillator. Yesterday, it did manage to close itself above the zero threshold, though. We're looking at the bottom panel of the left-hand chart out there. When price closes above the zero threshold level, at least for 2 consecutive sessions, it would indicate to us that buyers are the ones in control. We close above it, come right back below it, tells us that buyers never had control. That's the signal now. Now, with regard to the New York Stock Exchange, that signal would have a little bit more meaning if price were to close below its oscillator and change line. That number is 19,716.80. Get rid of the 80. 19,716. If we close below 19,716, odds favor that we at least make a run for its swing point from back on May 23rd. Now, that range could be anywhere from 19,390 up to 19,587. What happens if we don't close below that level? And this does have a wave 7 top. That is letter G out there. So that's part of the Chapman wave toolkit. But as long as price remains above that green oscillator and change line, the signal is somewhat neutralized. It even becomes more neutralized with the spot VIX index trading below its 50-day exponential moving average. The spot VIX currently traded at 1923. The 50-day exponential moving average, 2301. So you've got kind of a mixed message here. Advanced decline oscillator saying sellers are the ones in control. Spot VIX saying buyers are the ones in control out there. So I wouldn't expect too much movement one way or the other until that situation gets resolved. So that's what's going on with those tools out there. Let's go take a look at Perigee. Perigee came in, might have been Monday night, the 25th, whenever the 25th was, at 22:22 hours out there. And the Perigee pivot points, they are marked on these charts here I don't have the prices. They're marked on these charts with those blue horizontal lines. From a short-term perspective, sometimes from a longer-term perspective, when you trade above parity, that's when the moon is closest to Earth during the lunar cycle. And when we're above that line, certainly from a short-term standpoint, it is short-term bullish, unless we see some kind of topping pattern. For example, in the ES Mini, if we open this chart up here for the 30-minute time frame, just take a look at it. 30-minute time frame has formed a Rhodes Momentum Indicator bottom. It has formed a wave number 7. A Rhodes Momentum Indicator top, a wave number 7 top. Price is below its bullish structured profile. And I would say if price takes out this bullish engulfing candle low, that low is at the price point of 59.2350. Our last close was at 59.1775. So we did close below that area. As long as we stay below 59.1850 was the number. 59.1850. We closed at 59.17. Yes, we did close below. We did break through that. If we stay below that level, price is likely to target either its breakout area, that'd be the first level, 58.8550, or it could be targeting the perigee pivot point, which looks like it's at about the 58.66 and a half mark out there. So at this time, short-term bearish, and that becomes a potential support level. We can see that this level here has already been tested a couple of times and has held. That is that perigee pivot point. You can see along the top row here, you're going to get the NQ next. You can see we're well above that, well above the perigee pivot point. The same thing with the Dow, same thing with the Russell 2000. Now, the Russell 2000, I would say, is the weakest of the four. It's well below its swing point from back at about 6 o'clock in the morning. This being this morning out there. So this is suggesting to you and I that price wants to make a run for the 2065, maybe the 2062-ish level out there. If we take a look at gold, this is the August contract that we've moved to. We can see here, let me update this chart. I believe we are seeing a TD9 count bottom pattern perhaps form out here. Let me update this, and the answer is yes. So as we get to 11:30, 17 minutes from now, what gold will do for the August contract is form and complete a TD9 count bottom pattern. It's doing that at the breakout level of support. What does this suggest? At a minimum, it suggests that gold should rally up towards 33, 34. That's its oscillator and change line for the 30-minute time frame. If price were to close above that, we're looking at the next battle at 33.38. Next battle above that, 33.45. Above that, 33.47, 33.52. What happens if we close below the TD9 count bottom? Then that suggests that we head lower. If we take a look at silver out here, let's populate this chart. It also is going to go ahead and complete a TD9 count bottom pattern at 11:30. That suggests that price should rally towards its oscillator and change line, that being the 33.33 level out there. Natural gas, it is trading below its perigee pivot point. Natural gas, it does not have any kind of bottom signal out here. If we go ahead and try to open up the chart, it's likely going to make a run. It's already making a run for it. Let me pull this back even further. So it's making a run for a set of swing points that is held as support. The key level of support at this stage is going to be that hammer candle from 9 o'clock in the morning on May 23rd. And that low is 359, 3.599. You see price close below that, you're likely to see lower price. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let me get to some of the requests that have come out there. GTE typically asks about the international markets out there. My data feed for the Hang Seng and the Shanghai is a different data feed than what I'm using during the show out here. So I went ahead and took a snapshot of these images. The subscribers get this snapshot each morning out there. So if we take a look at the Shanghai, what we know about the Shanghai right now, it's trading below the oscillator and change line. It's 35.2187. It has lost its momentum. It increased the odds of a further move lower. I don't see any kind of a bottom pattern or signal. There is an A to B equals CD pattern that has formed. It's achieved, I don't have it drawn in there, but it's achieved at least the 1-to-1 level. So if a bullish reversal candle were to form inside the Shanghai, that would generate a Gartley buy pattern. If we take a look at the Hang Seng out there, the Hang Seng also, now the Hang Seng has a sell the D point top. It formed a bear sash candle 2, 4, 5 trading sessions ago. So that confirmed its top. We can see that price is also trading below its green oscillator and change line this morning. Price rallied up into it, rejected it. That's a signal that it likely wants lower price as well. If we take a look at the Nikkei has a sell the D point top as well. It's that bearish shooting star candle that's labeled bar number 7 on my screen. But what we can see here is that price is above its green oscillator and change line. That's a bullish signal. Now, price did test and reject the low of that bearish shooting star candle out there. So perhaps price can't bust them up. It'll try to bust them down. But support here is about 37,490. If it does trade higher out there, you want to watch that shooting star candle out there. That's on the Nikkei. If price closes above that, it would negate the sell the D point top. In the case of the FTSE earlier this morning, just as it was yesterday, it was taken on its TD9 count top. It closed above 87.9846, would negate that signal, and that would then suggest a further rally. The DAX negated its TD9 count top yesterday. That's a bullish signal. Remember, the DAX and the NASDAQ are very correlated, directionally speaking, out there. So in the case of the DAX, it negated the TD9 count top. It suggested it wants higher price out there. In fact, it had a TD9 count top price pulled all the way back to its breakout level. I believe that was on Friday of last week, found support there, and obviously has rallied ever since. And as long as price remains above that green oscillator and change line, conditions remain bullish. Now, a bearish reversal candle would confirm a Rhodes Momentum Indicator top out there. Remember, when we take a look at the NQ, out here, the NQ for its daily time frame, it has triggered a Rhodes momentum indicator signal as well. Again, just another indication of just how directionally correlated or pattern-wise these two of these are. Now, if in fact the NQ were to close above 21,544.50, that would be trading above all resistance. That would then suggest a run for its all-time highs out there. If we look at the weekly time frame chart, let me do this here. Let's take a look at the weekly time frame chart for each of the equity future contracts. So we'll cut out a little bit of noise out here. And on the weekly time frame for the ES Mini, you can see prices trading above the top of its weekly profile, and that's at the 58.65 level out there. We had a 1 week pullback. Now I don't know whether this week we're going to close higher or not, but if we do, that's a very strong bullish message, and when that would signal to you and I as the ES Mini really wants to get back to the 62.25 level. If we take a look at the NQ, well above its top of its profile, its weekly profile. It looks to me like it wants to go target 22,558. The Dow equity future contract is trading with inside its profile, and that's got resistance at 42,937. The Russell also trading with inside its profile, resistance up at 21,3290 out there. So that gives us kind of a decent feel, I think, with regard to what the markets are signaling to and I, short term, intermediate term out there. And now let's go ahead and get to some of the requests out here. So those first requests coming in from Hector and Patty. If you give me a moment, they wanted to take a look at ticker symbol EAT. So we'll take a look at that. The question is, where did Stevie put that? I'm hoping, and I put it right here. I did. So Hector and Patty, we take a look at EAT. I'm going to start with the monthly time frame chart. And on the monthly time frame chart, what we do not have that I see is any kind of bearish signal. What we do have is price pulled back, tested, and rejected its green oscillator and change line. We are trading above profile support. That profile formed below price. Longer term, EAT wants higher price. Now, on a monthly basis, this moved lower for 3 consecutive months out there. As you and I know, between 2 to 4 months is a typical knee-jerk reaction bottom, and it seems like on the monthly time frame, you got your knee-jerk reaction low. If we take a look at the weekly time frame chart, well, the weekly time frame chart is traded above both its green oscillator and change line and the top of its profile, the top of the profile being 160.28. As long as that condition remains, price should go target its all-time high. That's the candle session from back on the week of February 7th. The volume there was 6.7 million shares. Now, look, we've got a shortened week out here. Been trading for about a day and a half. It's done 2.2 million shares. Seems like pretty decent volume as price approaches that level. The key area here for you and Patty to watch is 160.28. As long as price remains above that, we're likely headed higher. Now, this could be week number 4 to the upside out there. So, not that it can't extend itself, just be careful, just be cautious. We get to the daily time frame. The daily time frame is trying to take out a TD9 count top. So the number to be watching here is the high from April 23rd, that high being 165.34. We are trading at 165.60. So if we close above 165.34, by the way, the volume on that candle session, 1.4 million shares, make it 1.5 so far today, 300,000 shares, so we're coming in a bit light. Nonetheless, you negate a TD9 count top, then that becomes bullish. So watch the swing point high, April 23rd. Again, the number there, 165.34. You close above that, the daily, the weekly, and the monthly chart for EAT says they want to eat more. They want to head high. Oh, wait a minute here. Oh, yeah, no, sorry, yes, that is the call out there. So Hector and Patty, I hope that helps you out. Thanks so much for your request. GTE wanted to take a look at BYDDF out there. So let's go ahead and pull that up on our screen. BYDDF right now, that's the FXI. That's not what you wanted. You did want the FXI, but you really wanted this too here. So let's get back to it. BYDDF. So let's get these charts here populated. BYDDF, you can see it has a TD9 count top for its daily time frame. Prices roaring back towards its breakout level at 50.90. GTE, that's the price level you're watching. We haven't gotten down there. If price closes below that, we're headed to lower price. Lower price would be 49.98. That would be the top of its weekly profile. It would appear that this week you will generate a weekly Rhodes momentum indicator top. If price closed below 49.98, you're back inside its profile. The next level of support could be 45.94. So you're watching 50.90. You get below that, you're watching 49.98. You get below that, you're watching 45.94. You get below that, you're watching the 42.23 level. Now, it's very possible at month end, which is Friday of this week, you will get a bearish reversal candle, a bearish shooting star that will confirm a Rhodes momentum indicator top for the monthly time frame. So you get a top on the daily, likely going to get a top on the weekly, you're likely going to get a top on the monthly time frame for BYDDF. We come back from this break. We're going to take a look at, we've got coming out with earnings tonight, we got NVIDIA, we've got Salesforce, CRM. So we'll take a look at those two. We're also going to take a look at HIS, FXI, SLX, the XLB, and any other requests that come in. CFLT, for example, from Duncan Steve inside the Tiger's Den. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at NVIDIA here. They're out with earnings tonight after the bell. So we're looking for any kind of clues that maybe it's leaving. So on a daily time frame, what NVIDIA does have is a TD9 count top. The key resistance level is 136.35. If price closes above that today, if it closes above it tomorrow, it negates that signal and suggests that we move higher. Your question would be move higher to where? The next resistance point would be at 146.89. That would be the top of the monthly profile. So that would likely be the upside case that we'd be looking at. Not that it can't trade higher than that, but that would be the next resistance level. So 136.35 is the daily resistance. 146.89 is the monthly resistance. The weekly time frame chart, if you're looking for a tell, is that price should trade to the upside. Why? Because we are trading above the top of its profile. We're trading above its green oscillator and change line. If we look at the monthly time frame chart, the monthly time frame chart is also suggesting a further rally. We're trading above its green oscillator and change line with price trading with inside its profile. So I would have to say that the tell here for NVIDIA is that it should go target 146.89. What we also know is last Friday, markets towards the 2 o'clock time frame started trading lower, and price found support at 130.01. If price were to close below 130.01, then we'd be looking at 128.20, 124.65. And I could keep going, but those would be the numbers that we'd be looking at for NVIDIA. So the daily is not tipping its hat out there, but the weekly and monthly are sure suggesting that they want higher price. Let's go take a look at the next instrument that is out with earnings after the bell. That's going to be Salesforce. CRM is a ticker symbol. Now, in its case, it has been trading below the bottom of its bullish structured daily profile for 2, 4, 5 consecutive sessions. Its next level downside target of support would be at 268.54. That is for the daily time frame. The weekly time frame shows that price is trading below its red oscillator and change line, but it is also trading into the buy zone. And the buy zone is between 263.48 and 271.85. So you got 263.48 at support, 268.54 at support on the daily time frame. That 263.48 was the support on the weekly time frame. That's a key level to be watching. If price were to close below those levels, then that opens up the door for the monthly chart to move all the way back to the 245.89 area. What is this signaling to you and I? Well, the daily is saying lower price. The weekly is saying I got this buy zone between 263 and 271. So it's not extremely clear, at least to my eyes out there. If we go take a look at our next request out here, see if I can do this. I believe it is HIS. No, it was FXI. No, HIS. Let me just see if I can find that. Did I put that here? I did not. Okay, so I'm not sure where I put HIS. I'll have to come back to that one. But let's go on to the next request out here, which is FXI for GT. So we take a look at FXI. The only thing that I can share with you here is that price is trading above profile resistance at 35.09. That becomes your support level, but it's trading below 35.79, the green oscillator change line. It's lost some momentum. That was the daily time frame. The weekly time frame, price is likely to pull back towards 34.22, the bottom of its profile out there. That's what I see when I take a look at the FXI. Let's go take a look at SLS. This is for Dan inside the Tiger's Den. Let's see if I get these charts here correct. I believe SLS is right here. It is. Perfect. So you got SLS, which has done what? Well, first of all, the monthly chart is not legible. So I can't come up with anything here for you. What I can do is take a look at the daily time frame. The daily time frame has a Rhodes momentum indicator top. That was formed on May 21st with that bearish engulfing candle. That sets up your resistance level, your key resistance level at $2.07. So you've got a top. Price is below the top of its profile. Dan, I would say the next move is to about $1.83. That is its green oscillator and change line. If price were to close below $1.83, you'd be looking at 172. Below 172, you'd be looking at 143. The weekly time frame has an A to B equals CD pattern to the upside. It does not have a bearish reversal candle. If it were to form one, that would confirm a sell the D point top. Short of that, I don't have any kind of topping signal on the weekly time frame. So the weekly, it remains bullish, quite frankly, because price is trading above profile resistance at $1.85, as well as its oscillator and change line at $1.53. But the daily says I still have some downside work, and that's at that $1.83 level. That would test the top of that weekly profile. So watch the daily as it tests that green oscillator and change line for its daily time frame. If you close below that, then you know the routine. You have some lower price coming at you. Our next request is to take a look at, I believe it is the XLB. Let's see if that's what. Nope, that's not what populated. So let me actually. I kind of screwed this up. And it's not the first time. It won't be the last time. But there is, I am going to do this one first. IMRX. So if you take a look at IMRX, it went ahead and completed a TD9 count top yesterday. It is likely to be negated today. It'll be negated today with a close above $1.67. We're trading at $1.68. Maybe I shouldn't say it's likely to negate that signal. But if it does negate that signal, you still have resistance at $1.70. So in order for IMRX to give you that really bullish move on a daily time frame, you need to see a close above $1.70. If in fact the TD9 count top holds, then Dan, what price should do is pull back to test the 138 to 144 level. A test and rejection of 144 would be your bullish signal. That would be your next entry or addition into IMRX. The weekly time frame looks pretty good. We're trading above last week's high, so we know that's a bullish signal. If price can remain above that, price wants to go tackle 242. Of course, it can't get to 242 until it takes out $1.70 coming from the daily time frame. The monthly time frame chart, we're trading above last month's high. That is a bullish signal as well. So it's really all going to be about the daily time frame. Does it negate the TD9 count top? That's one thing. Does it take out the TD9 count breakdown resistance level to $1.70? You accomplish both those things. That should lead to a further rally. So that's what I see when I take good IMRX. All right, so Stevie's going to go back to this spot right here, and I'm going to go ahead and type in HIS just to see what this does. It's going to take a probably 15, 20 seconds here to populate, but maybe the daily chart will populate first. And if it does, it looks to me like it is consolidating with inside. I'm going to hold off a minute. It's still got the, looks like it's consolidating. Now we'll know for sure. Maybe it wasn't HIS. So I don't think I wrote down the correct. Oh, it was the Hang Seng. That's what it was. Sorry. That was, okay. Now I know where I'm at and how I screwed up. Now, let's go ahead and put in the building and material sector, the XLB out here. So that was Stevie's fault. But I did figure it out. So Dan says he's noticed something inside the XLB on his charting tools. And his question is, am I seeing the same thing? So when we come back from this break, Stevie's going to answer that question. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the building material sector inside the S&P 500. XLB is the ticker symbol. In the XLB, it will appear that today it will form a sell the D point top out there. As long as we get a bearish reversal candle, and right now we've got a bearish sash candle, that would confirm that sell the D point top. Now, price is trading with inside its daily profile. So the level of support, as well as also trading above its green oscillator and change line. So the key area to watch here to the downside is going to be 85.90. Now, 85.90 is the bottom of its profile. What you'd want to watch, it's got a swing point from May 23rd. 3.6 million shares traded hands that day. So far today, we're at 1.2. We're a little over 2 hours of trading, so it's pulling back with similar type volume, although it has not gotten to that swing point. But it looks to me like the XLB will want to go tackle 85.90. If it closed below 85.90 and is trading inside that swing point from May 23rd, and is doing it with more than 3.6 million shares, price will go test that low or perhaps take it out. If it takes it out, it says lower price. Lower price to where? Well, I would then turn to the weekly time frame chart, which has its oscillator and change line at 84.33 and support being the bottom of the profile at 83.19. And that would be the next downside target. If price were to close below 83.19, I don't have any kind of a top on the weekly time frame. What we have is price selling into, or what price printing into its sell zone out there. And that sell zone is between the price level of 83.19 to 86.53 out there. So if price were to close below 83.19, then we'd be looking to move to 80.33. The TD9 count breakout level. Your eyes see 80.51 as potential. Well, so your eyes and my system show 80.30. So I show 80.33. You're 80.51. Let's go ahead and split the difference there. I get the extra penny on the tip out there. But you can't get to that 80.51 potential, obviously, until we start breaking through 85.90, 83.19 out there. And the monthly time frame chart, shows that we traded lower for 3 consecutive months. We've been rallying, but our rally ran into resistance at 87.56. So 87.56, the actual high that we've gotten to for the month, let's just see what that high is. It's at 87.48. So 87.56 is also another key resistance level. So no top on the weekly time frame chart. Won't really comment on the monthly chart out there. I could probably find a sell the D point top out there. But I can also find a buy the D point bottom pattern that is forming this month, right? You got a bearish engulfing candle. So the monthly chart is basically going to give you a bullish sign. The weekly chart is going to give you a neutral-ish type sign out there. And the daily might give you that bearish signal. So, Dan, you got to watch that profile support areas that we've already discussed before you can get down to 80.51. So hope that helps you out. I'm glad that your system and my system seem to have come to agreement with regard to where an ultimate level of support could be for the XLB. You also want to look at SPRO out here, which is having a miraculous, wonderful day. Everybody inside this trade is happy campers. Well, depends when you got in on this trade, right? Because we can see this traded up to $20. You're at 223 right now. Now, what you love about today's action, and you'd love to see today's action retain itself through Friday, and that would be a close above $1.81. If you close above $1.81 on the monthly time frame, that's its TD9 count breakdown resistance level. That would be a bullish signal. On the weekly time frame, let's open up the weekly time frame chart. You can see today's gap to the upside is created. What the heck is going on there? Wow, that's weird. So there's some way to put that into the back. Always on top. That's why. There we go. Now we should see it. Okay, so here we take a look at the weekly time frame chart. The weekly time frame chart appears to be taking out three TD9 count breakdown resistance levels out there. So this is a real bullish move. So that third level on the weekly time frame is at the price point of 224. We're at 228. So Dan, if this closes above 224, what you really want to see it do, though, is close above the swing point for back in September 23rd, the week of September 23rd. That's 318. You close above 224, you're going to get up to 318. If you close above 318, you continue to motor on higher out there. So the weekly time frame looks pretty good. They had a phase 3 trial stopped for efficacy today. Well, they had it stopped for efficacy today. Boy, it sure is behaving pretty strong out there. So that's what I see when I take a look at S-Pro. Hope that helps you out, Dan, and best of luck to you on that trade or investment. Duncan Steve, pill form versus injection, great. Thank you. Duncan Steve wants to take a look at the Semiconductor Index ETF, SOXX. Let's go take a look at it. SOXX on Friday. It's got a TD9 count top. Price pulled back. That's the daily time frame, I should say. Price pulled back, found support at the bottom of his profile, 200.49. If ever you wanted to see, do these profiles work? Well, there's your answer, or there at least there is an answer out there. And that answer is yes. Now, price is trading back above the center of its profile, above its green oscillator and change line. It's suggesting, Dunk, that we should see a move towards 216.70, the top of the daily profile. On the weekly time frame, though, price is pulled back inside its weekly profile. So we've never got the breakout, the profile change in trend signal, because we didn't get two consecutive closes above 209.93. But if price can close above 209.93, that would then signal SOXX would make its way up towards its TD9 count top. That's at 216.70. A close above that would negate that signal. Then that would tell us that we head to 233.44. That is the top of that's the weekly TD9 count breakdown resistance level out there. So the SOX is looking pretty good. The daily TD9 count pattern may have completed its move to the downside out there. Now what you're waiting for is the weekly to get back above the top of that weekly profile. Again, that magic number 209.93. Duncan also wanted to take a CFLT out here. So let's go ahead and pull that set of charts up and see what they are communicating to you and I. CFLT right now for the daily time frame, which has a Rhodes momentum indicator bottom pattern. It has a TD9 count bottom pattern. Price is traded with inside the bullish structured profile, signaling to you and I it should make a run for 23.66. However, what we can also see is that CFLT on its weekly basis has found resistance at its oscillator and change line, taking us back into March, the early part of March. So the key level here is closing above that oscillator and change line for its weekly time frame, currently printed at 22.97. You know the routine. As price moves higher, that number will move higher as well. So I don't know, make it 23 and change out there. You close above that, then you get to 23.66. The monthly time frame price is traded with inside its profile. So nothing really to share with you there. It's all about the weekly time frame chart, Steve-O. And the price can close above that oscillator and change line, then that should put you into the rally mode out there. In fact, if you can close above 23.66, it would signal to you that price would likely make a move to 25.60. 64. So that takes us through all of the requests out there. That is a beautiful thing. So we come back from this break. We're going to go to break out here in about 3 or 4 minutes. I'll check my email system, see if there's any requests there. If not, maybe we'll just take a look at what's going on from a day trading standpoint inside the NQ, maybe the ES as well. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. A little change of thought on Stevie's behalf out here. I pulled up the seasonal charts for us. So let's take a look at this. Is the S&P 500 for the last 97 years. So let's talk about the sell in May cycle. The sell in May cycle typically for the S&P 500 begins around May 7th and lasts on average through May 24th. The red vertical line is where we're at today. So you can see that we are now in the favorable seasonal cycle for the S&P 500 as we come out of May. If you look at the very bottom right-hand panel, you'll see that June and July typically are very bullish months for the S&P 500, with tops forming right around the beginning of September. Now, that's over the last 97 years. We can take a look at the last quarter of a century. Last quarter of a century shows that we should rally up into about June 8th, then a retracement down into June 25th, and then a rally basically into a high of the end of June, maybe in towards the September timeframe. We can take a look at the last 10 years worth of data out here. Last 10 years worth of data suggests that we should rally, quite frankly. In fact, this shows a bottom around March 23rd. Our bottom came in on April the 7th. This shows a further rally. Now, if we take a look at, go back to the 97-year period, and what we do is we take a look at the seasonal cycle for post-election terms out here. That's what we've got right now. This one shows that a bottom should come in April 7th. Well, that's what we've got. Significant bottom on April 7th. This suggests that the S&P 500 should rally into the August timeframe out there. So those are the seasonal charts for the S&P 500. Now, I can take a look at that presidential seasonal cycle over 25 years, but I don't know if if we do that, we're going to get rid of a lot of touch points out there. Over 97 years, that only gives us 25 actual years to take a look at. But even over the last quarter of a century, still suggests that we should rally into at least the end of June. So that's your sell in May cycle, your post-election cycle for the S&P 500. And that is the end of today's show. But folks, stay tuned for all the great programming. I'll look forward to being back with you tomorrow at 11 a.m. sharp. You have a wonderful Wednesday. Take care and be safe out there.